Hello everyone, welcome back. This is week 5 of my trading journey. So this week I took quite a few trades. I definitely overtraded a bit. I'll talk into details what trades were what. So as you can see, my current equity is 98.7. So this week I traded on 4 days. You can see I traded on 28th, 30th, 31st and 1st August. So I'll go through all the trades. So on the first day, on the 28th Monday, first trade I took for this week was Aussie dollar. I mark out my level, something like that. In my opinion, this trade was not, after reviewing, I feel like it was actually not the best trade. I'll explain why. But initially I thought it was quite a good trade, but now thinking back, maybe not so good. So this is how I draw my setup initially. A resistance that rejected price a big amount, but rejected it again a few other times, and price push up and came back down. So this is how I drew up the trade. However, I don't think it's so good because this high that I mark out is actually not a daily high. So usually for my touch trades, support resistance trades, I like to draw them off daily levels. So if you notice, this daily high over here actually acted as support before it broke down. So this high, which is a local high, a H1 high, is not as significant as a daily high. Hence, after reviewing my trade and journal, I don't think this trade actually fits my criteria. But nonetheless, the time when I took it on Monday, I felt that it was a decent trade. But so after reviewing in the journal, I'll record it down, and it's not the best trade that I've taken. So that's for trade 1, minus 1R. So the second trade I took was on euro dollar on the same day. Euro dollar was dropping very quickly on the Monday. So there were two naked H1 level over here. The first level is this, and the second level is this. So I took the trade something like this. This is how my entry stop look like. I had another H1 play. I draw it something like this. I enter around here, and my stop below the H1 candle, and my target here. So I'll be zooming in now. So you can see the ATR is about 95. So on the day itself, price was dropping very quickly downwards on Monday as well. There was actually another H1 level here that I could have played. Maybe I frame my entry here, my stop somewhere around here. But however, I passed on this trade because there were a lot of H1 lows here, and I cannot able to get 1R properly. So even though it actually did bounce more than 1R, but at that point when I analyzed the trade, I felt like I couldn't get 1R because the most common H1 low will be somewhere here. I need to stretch my target probably to, even if I stretch my target to this low, I cannot really get 1R, so I passed on the trade. So price was nicking down very quickly. You can see at the point price was already exceeding the average true range. So I was looking for mean reversion trades. Hence I went for the second option, which is this. So the reason my TP level is here is because initially I was targeting this H1 low, but you can see the risk reward is only 0.88. So usually I like my risk reward to be at least 1. So I figure out that this low is just one low. Compared to this, there are numerous H1 lows that could potentially reject price. Since it's one low, it's possible that price bounce further higher. So I move my take profit to the second lowest H1 low that I can find. So that wraps up my trades for the first day, Monday. So moving on to Tuesday, I took this trade on Tuesday. No, Tuesday I did not trade it because Wednesday was FOMC. So on FOMC I took two trades. The first trade I took was silver. So I can mark it out now. So I took this trade here. I think my entry was here. Stop below this H1 low. and take profit around here. Yep, I think my entry was slightly lower, a bit around somewhere here to get at least 1R. So this was also another mean reversion trades on FOMC. Price was dropping very quickly on Wednesday. The average true range is 0.79. We already exceeded 1 point on the day itself, so felt it was a good mean reversion trade. Nonetheless, I got stopped rather quickly. Yeah, that's my first FOMC trade. Another FOMC trade I took was on I took another trade on Aussie dollar again. So I'll mark it out on here, Aussie dollar. So Monday I took that. Tuesday there was this level here that I mark out, and my stop was below here. So you can see this was a H1 high that consolidated and price broke out very cleanly. There was no retest on the breakout candle, very violent breakout. This is how I like it. So I enter when price was dropping very furiously into my level. You can see 94.4 when the average true range was 59. I took the entry here with my stop behind that H1 low, right here, and then my take profit is must be at least 1 hour. So this first low only gives me 0.95, so I move to the next higher 0.99, and I settle for this 1.02. But however, I closed the trade at the 4 o'clock here because the day has ended. So usually I do not want to hold my day trades unless it's a swing trade. I'm okay with holding overnight. So actually I closed this trade slightly below break even. So I did some review. Usually my day trades, I figured they are not profitable holding overnight, hence I decided to close them always before the day ends. So this is something I'll still be actively practicing for my day trades. However, I noticed that for FOMC it might be slightly different. I'll still continue to monitor, and I might do some tweaks along the way, because FOMC, but the trade I was filled at 0.200, the day ends at 0.400 is the last candle, 0.500 is the next day already. So the trade only have like 1 hour to really play out. So maybe for FOMC trades I might hold them overnight, considering that this trade did play out. But I'll be reviewing in my journal and we'll see how it goes. So this is another trade that I took, Aussie dollar. So I took 2 trades on FOMC. First was the silver and this was the Aussie dollar. Then on Thursday I took this trade on dollar JPY. So this was actually my only win, I guess, my only bigger win. I took this trade under the daily time frame. You can see we have a daily bias because after FOMC candle, the daily closed as a daily bullish engulfing candle. It closed above the previous candle high, and it also closed above this swing high over here. So I have a high time frame bullish bias, and I was playing towards the next high. The reason I target this was because usually once this candle close, I look for the next nearest the daily high or low. So looking at over here on the left hand side, after we take out this high, the next high is this pink color high already. So that's where my TP goes. So whereas for entry, so this is my daily bullish bias. I have a daily candle. I have 2 strong rejections over here. So, and I also have a H1 trust candle that closed above all these highs. So the subsequent day, I put my entry right at the H1 level itself. Stop right below the H1, and my take profit is at the red line. 2.46 R. So this was dollar JPY, and on the last day itself, on Friday, I took this trade on Euro Swiss. So this is this was not the most optimum trade now that I review it. So initially on Friday I saw this level very clean. You can see it provided support here, and support here. Provided support on multiple occasions. So once the daily closed through the level, I have a short bias. I was looking for shorts to play for lower towards the red color line, similar to my dollar yen trade. So however, if you look closely in the H1, you can see that this level, it was very clean initially, but it was not so clean during the breakdown. You can see price acted as support here. Price closed through the level. Price closed through the level here, and then it came back in and bounced. So not so sure this level was last acted as support or resistance. Next, price closed through. It did not drop instantly, and it came back for a retest again and then drop. So actually this orange color level, which was how I framed my trade against, I'm not very sure if it last acted as support or resistance. You could argue that it acted as support on this attempt, and it acted as resistance on this attempt, because it rejected it from underneath and dropped. So this was not a very clean level in my opinion, so I should have passed this trade in hindsight, but I did took it on Friday, and this is how I framed my trade. I took a loss on this one. Yeah, not my best trade. In hindsight, I should have passed on this trade, because on the H1 structure is not clean. Usually I like my daily levels to be significant. This was significant. However, you also need to be clean on the H1 time frame. So you can see for the dollar yen previously, you can see there was no candle close through. So even though it's a daily level, but it's very well respected also on the H1 time frame. See, it's rejected, week above, reject. It consolidated beneath, no close through. Once it closed through strongly, and there was no retest as well. So it's a very clean level, whereas the Euro Swiss was not very clean. So I should pass on this trade as well. And my last trade of the day was pound JPY. So I took this trade here on Friday. I think my entry was this line, and my stop was here. My take profit was actually this line. So it gives me, you can see it consolidated and exploded very quickly towards the upside. So I figured that it should provide a good bounce if price came very swiftly downwards, and price did indicate very swiftly downwards. You can see price dropped 274 pips. It was the daily average is only 149. So it should be a good mean reversion trade. I entered somewhere here, and stop right below here and target here a bit over 1 hour. So yeah, that's how I frame my trade. So looking back in hindsight, I did took 7 trades this week. I feel that I overtraded a bit, and what are the trades that I should have passed on? So there are 2 trades I feel like I should have passed on. The first was the first trade on Monday, which I draw over here. I like my levels to be marked from the daily level. So this was a local H1 high, so I should have passed on this trade. And second trade that I should have passed on is Euro Swissy. I like my levels from the daily as mentioned, but it also needs to be clean on the H1. So for this Aussie dollar trade, it was not a daily level, but this level was clean on the H1. You can see well respected on the H1. Once price closed through, there was no retest, very clean. No, on the rejections there was no close through, very clean. But the level needs to be clean on the H1, and it must be a daily level. So it's not a daily level, so I should pass on that. Whereas for Euro Swiss, it was a daily level, but it was not clean on the H1. On this breakdown, once price closed through, it kind of acted as a rejection from underneath and then dropped further. So I don't like it. I should have passed on it. So let's wrap up my 7 trades that I take for this week. Whereas for the upcoming week, some plans that I have made, we can go through them now. I think I have one trade potentially here. Yep. So this H1 level, I'll delete this. H1 level here, price drop, and then consolidated before dropping very quickly. So if price could hover here and came up swiftly, I might play a rejection towards here. That's one of the forecast trades. Another one probably pound, maybe Euro Aussie. Yep, another H1 cluster here. If price came very swiftly downwards, there's one level here, but price exploded very far away. On top, there's also this 1.80184 level. If price come up very quickly, I would like to take a trade as well. I have another one on pound. Pound is actually quite a nice trade. I can draw the fib over here. So it's actually a 0.618 fib. It's also a daily low. The price rebounds off quickly, but before price broke through, you can see price consolidated, never touched the level, consolidated right above the daily level, and then broke through it strongly. So I'll put my entry stop based on this H1 bearish engulfing candle. I'll put it there, and if price comes up, I'll take a shot maybe to the blue line here. So very nice level I have there. Another one is Aussie New Zealand. I have one H1 cluster above, and however this trade, I need to watch it, because if price, because this my take profit area might be less than 1, which I don't like, so I might have to take profit here. However, if price consolidates around here, then my take profit level, I might have insufficient room for my take profits, so I might have to pass on this trade. I have to see how price develops. And my last forecasted trade, Euro Canadian, also a H1 cluster right at the bottom. So if price goes up and drop very quickly down, I might take a trade. Something like that. Yeah, so that's it for this week. So my main takeaways for myself through the journal reflection was when I draw my daily levels where I take the trade of, it needs to be a high time frame level. First, the level needs to be a high time frame level. It needs to be drawn from a daily level. So my levels criteria. First, it needs to be high time frame, drawn from high time frame daily, either a D1 high or low. Second, it needs to be well respected on the H1 time frame. Yeah, so for first, Aussie dollar did not fit the first criteria, and Euro Swiss did not fit the second criteria. So that's my takeaways for this week. So that wraps up my first month of trading the FTMO challenge. Looking back, my account is not positive yet, but I'm quite pleased with the results, because I feel like I made some mistakes. I missed some trades as well, but I could definitely do better, especially execute better. So I'm positive we could slowly grind our way up to profitability. So I guess I'll see you guys in the next one. This is pretty long because I took many trades, overtraded twice. So I'll see you guys in the next one.